Traders, welcome out to your FX Crypto midweek. We're going to be talking currencies as always on May 24th. I've spent quite a lot of time with our currency division this week. I did the roundup on Monday where we talked about the kind of week coming up, and then yesterday we traded the RBNZ together. So back for the third time in 3 days. Kind of fun to be together. Now let's jump in here and talk about what's moving, where we're at. We're going into the debt ceiling deadline, and we said expect a little volatility, probably a little bit of a freak out just going into that. And that's what I think this week is. So if you're kind of in high panic mode, I think that's probably overdoing it. I think this is the way these things work out, is usually about when you get into that week of the actual deadline that they've set. That's when volatility and a little bit of fear kind of spikes up, and then there will be a resolution, whether they extend the deadline, whether they come to some agreement, whatever it may be. Look, we're not going to default on the debt. So again, let's put some of your worries at ease there, but I'm not surprised. The market just does this, right? As you get right into the event, there's this little panic that sets in, and that's where some of the equities and things are kind of pulling back a little bit. Also, the NASDAQ had a little bit of an exhaustion high. We'll look at that from the chart. I don't think it was the high. I don't think it was the end all be all, but certainly kind of signaled, hey, this was the spot where things got a little overheated, and now we're seeing the downturn. Some profit taking, some probably shorting into the debt ceiling, etc. But again, I don't think it's going to get too severe here. A little bit more volatility probably coming though, because again, they push these things to the edge. They always do that. The safety trade, kind of the anti-banking, has been correcting. I removed USD from that group. I said, look, gold, silver, Bitcoin, Japanese yen, even Swiss franc, I expected all of those to go down. The US dollar, I've almost sort of given up on it as a traditional safety trade because it's moving on other elements right now. So I'm removing that as kind of the traditional spot, and I think it's trading more off of its own debt ceiling issues and things of that sort. So just kind of USD's on an island a little bit, but all these other things are pretty much falling in line as one would expect. As we've been in a more risk-on environment, those things have come off. I really liked gold and silver and Bitcoin to trade lower. That has been playing out for a few weeks now. As we look at the economic reports, flash manufacturing in the U.S. missed, and below 50 is a slowing. It's a recessionary type of number. However, flash services well above. And this has been an ongoing theme. Manufacturing has been very weak, but services very strong. That's true throughout the entire economy. In the UK, CPI year over year came in at 8.7, about 0.5% higher than what was expected. So inflation still running hot in the UK. One would wonder if that kind of leads towards a more hawkish Bank of England and such. We'll have to, or pardon me, Bank of, I said it wrong. So if you look at the UK and basically their governors, whether they're going to be a little bit more hawkish, not the ECB. The Kiwi, dovish rate hike perhaps. They raised rates by 25 basis points, but the Kiwi really got hit. Now, unfortunately, we tried to trade the Kiwi short. That was our thesis. That was where we were looking. It just moved too quickly. I mean, it really moved, and it moved fast, and it moved hard. It didn't give any little chop or anything like that. And sometimes that happens. That's one of those where you'd almost have had to have been short into the announcement and into the print. And that's always a lot more aggressive with just getting, in before it even happens. There can be some big gaps and some fake outs and things of that sort. But We tried to short the Kiwi. It certainly was the right trade idea overall. Now let's go look at a few other items here as we think about where we're at and where we're going. So weekly performance wise, again, starting to see the debt ceiling come into the headlines. So the S&P equity markets internationally down. Crypto and gold continue to trade poorly. Now oil is up, and oil's hanging in the past couple of weeks. On Monday, I did the market roundup and talked about CAD. I thought CAD was at a nice spot for a buy, and it's rallied a bit higher. So I still like that to even go higher still. It's not quite as good a entry point as it was, but still I think is the right spot to be looking. So as you look at the S&P 500 chart, we've been bullish overall. We've talked about this kind of cup and handle dynamic that's been in place. The problem for the markets right now is the debt ceiling. So is this the derailment? Have we hit the high? Is the rally over? It's possible. I don't think it's likely. I certainly am not. Um, I wasn't as bullish up here as we had been down here at the bottom of the handle. If you've traded with me for a while, you know that my ideal spot to buy is more at the where I think the bottom of the handle is, right? 30% the size of the cup and such. So this was the great buy point. I wasn't really aggressively buying here on the breakout or anything, but I still sort of suspect that there's maybe a little bit more to go. The problem for the markets is the NASDAQ was leading. And the NASDAQ may have, I don't know if it did for sure, but it may have been the market to watch most carefully. If I pull this up, if you look at the NASDAQ did in fact have a bit more of an exhaustion finish. Now it wasn't massive, but it was sort of the elements of an exhaustion where you were overextended, you got more parabolic, huge bullish influx, right, of buying and so forth on increased volume, and certainly has been exhausted from there. So the NASDAQ looks like it sort of put in the type of exhaustion we've been talking about. The S&P didn't really do that. Makes me wonder though if the NASDAQ was what you needed to focus on because it was driving most of the gains. So I find myself in this tricky spot of do I want to be mega bullish? No. Do I want to be mega bearish? No. The ideal would be to have had, and maybe we still get it, to have another rally where the S&P goes on that run and a bigger signal overall. I don't think that's out of the question. I do think that a lot of this selling was pretty predictable. We talked about it. Look, expect a little volatility and a little freak out as you come into the debt ceiling. And that's what we're having. That little freak out could sort of derail the charts, could kind of trigger more selling, which begets more selling and kind of feed on itself. It's possible. So I still lean on the bullish side, though. I still think that perhaps we're not done overall with this rally, but it's not picturesque. It's not perfect that way. Now let's come back over and look at currencies. As we said, the New Zealand dollar by far and away the worst performer. US dollar ramping up and more just debt ceiling related. Everything else is a little bit more standard. We highlighted the CAD, which was at a nice inflection point a couple of days ago, and it's rallied up nicely where it had been in a little pullback. So it's probably about 1% higher from where it was on Monday when we talked about that in the currency roundup. Litecoin really sharply lower, it down 7%, but otherwise crypto in general rolling over and really failing exactly where it should fail. So if we look at some of these charts to make sense of them, international markets similar to US markets, we're in a little freak out. probably a little bit lower here towards the bottom of the range. Do we just continue to deteriorate from there? Or is this just another retest at the bottom before we get that final flurry finish? I lean towards thinking we're going to have a little bit more upside coming in the near term. Bitcoin, on the other hand, does just look outright more bearish. We talked about this, that it's in this series of lower highs and lower lows. And so what would you expect to happen here? A lower high. What would you expect comes next? A move down here to lower lows. And that's exactly what is materializing. If you're trading the crypto markets, today's rollover should be just more of the same, leading us towards lower prices here. Once you get to a lower swing high, well, you'll probably have a rally back up and you know, from this lower low, maybe make a lower swing high and such. That trend can continue, it can persist, but certainly more bearish in that space. Now, as we look at the rest of this week, so we've had a pretty active week in that, you know, the biggest news event so far was certainly the RBNZ, and that created a lot of volatility. What's gonna influence the markets in the same way? I'm not sure there's really anything, even though we have an inflation number. So we get Fed minutes later today. We get preliminary GDP in the morning. We get some core PCE. Out of all of those, I suppose this one theoretically has the most potential because it's an inflation number. A lot of people are worried that inflation's going to stay more sticky high, kind of hang out in the 3s and 4%, which is, it's coming down and it will take a big hit in the next 2 months, but is it going to stay more sticky at an elevated level above the Fed's target and such? Certainly possible, and the markets, it's funny because markets didn't pay attention to any inflation for the longest time, and now they're laser focused on that. Now, the Fed made a historic and just such a stupid error. It makes no sense. If you go back and look at the Fed and their policies, it was ridiculous. Do you know that we didn't raise rates until the inflation rate was above 7%? As inflation was at 3 and 4 and 5 and 6, the Fed found it unreasonable. It found no reason to raise rates, continuing to say, oh, it's inflationary and so forth. It was the sort of the most ridiculous. The data was right in front of them, and they didn't raise rates until 7%. But it gets worse as you look at the history of the Fed recently, in the past couple of years. Excuse me. So if you look at back to the last couple of years, it's worse because the Fed during that time was still in an asset buying program. They were still buying mortgage-backed securities and all these sorts of things, which again is inflationary. And it was some of the most idiotic decision making that I think we've ever seen. And so the Fed is stuck in a situation. I compare it, the analogy I came up with was a golfer, and they just hit one in the water. They can't err on the side of being short again and hit it into the water again. So, in other words, they got inflation so wrong and so stupidly wrong that they basically have to play more club. They have to overdo it. They're probably going to hit the next one over the green because they just can't afford to hit it in the water again and look that stupid. So, is the Fed going to continue to fight inflation, maybe overdoing it? I think the answer is yes. They messed up once, big time. Can they mess up again and let inflation continue and let it stay sticky high and so forth? I don't think they can do that, and that's the problem that the markets are going to have later on this year. That's why I think that there is a pretty significant high coming in equities, and I do think there's a pretty significant deterioration coming. So we've got to look at it on a risk to reward basis. And if I take something like the S&P 500, how bad do I think it can get? I'd say pretty darn bad. A lot of downside. Probably more than 10%, probably 15, 20% lower in stocks and so forth is coming. So really bad. How much more upside do I think there is? And here's the problem is on the trading side, there's probably a little bit more upside. I lean that way. But the issue is there's just not much left. We could have another 3, 4, 5. But if we're thinking down 10 to 20% is very probable here, and only up maybe 3 to 5% best case, and I don't even know if it can muster that much, the risk to reward is certainly skewed. So in a perfect world, we will get this first, and then we'll get the big downturn, and that's sort of the trading mentality of this. But just understand that this is the big picture. This is where I think the puck is going in the future. And so to use the Wayne Gretzky analogy, I skate to where the puck is going, not to where it's at right now. I think where the puck is going, well, first, a little bit higher in equities, and then a pretty big dump later this year. That's my concern. I still don't think we're out of the woods, and I think the Fed, you've got to enter into that higher for longer. Are they going to keep rates higher for longer? I think so. Are they going to be cutting rates aggressively later this year? I don't think so. So I am not in that camp that thinks that the Fed is just going to flip a 180 and quickly start cutting rates and go aggressively dovish. They screwed up too big, and that's just a huge problem for them. So let's come over and look at a few more charts. Now, if you have anything you want to look at specifically, fire away. I'll go through our currency basket. This was one of my favorites. This was the CAD. We talked about it on Monday in the market roundup, and it's patterns within patterns, as we said. So here's where the CAD was, retesting the old resistance. And then in addition, it sort of had that little cup and handle type of feel. I still think there's more upside. Even though it's gone up quite a bit the last 2 days, I think there's a breakout looms, and it should start to break out for a few more days here. So some of that's going to be dependent on not getting too bad of a risk-off move, that there's some sort of calm. I think most of the equity downturn in the short term is finished. So I would anticipate a rally starting right here in essence. I think this is sort of the bottom for equities and that we get another little shot to the upside. If we get that blow off top here, that exhaustive run, I will frankly be flipping a 180 at an exhaustion high. If the S&P gives me the signal, I will get net short, take profits in risk on type of trades, and really get more aggressively negative on equities to go lower and on risk off assets to go higher. So that means everything we've been talking about, like buying things like CAD and Kiwi, we liked buying it on this trend line retest and such. Kiwi's interesting because it's back to the trend line again. I could see an environment where the Kiwi actually bounces here as well. I think the Kiwi's it's not a pattern you see all that often, but it's an alligator crocodile type of pattern where it's the opposite of a symmetrical triangle. In a symmetrical triangle, which is called a volatility compression, you get squeezed tighter and tighter with a series of lower swing highs and higher swing lows, right? In this case, it's the crocodile or alligator mouth where it's opening up, and it's a volatility expansion. Basically, you're getting more and more volatile like this, and so that's kind of the dynamic it has here. Kiwi should bounce right here, right now. Aussie should be a little bit better. CAD should be a little bit better in that I think we got another risk on run in the very short term. But in that exhaustive high scenario, which I am watching for aggressively, then you got to flip the script and you got to say, buying things like Japanese yen, which looks terrible on a chart. And I've liked yen to go lower. I mean, yen should be going lower, right? We've been in a risk on environment. That's when yen should go down. That's when gold should go down. That's when Bitcoin should go down. That's been happening on a risk off environment. I think we essentially flip a 180 where it's like, now we play yen to go up. Now we play gold to go up. Now we play Bitcoin to go up. Now we play Swiss franc to reemerge and so forth. US dollar is tricky. I'm going to kind of cross that one out. It's not been playing it's been moving to the beat of its own drum. So I think you've got to look at other elements with it. You've got to look at Fed policies and the higher for longer and a few things that way to kind of determine US dollar. You got to look at the debt ceiling. You got to look at a few different items there. But the rest of these, we can somewhat flip the script. I'd put Swiss franc in here too. Swiss franc, yen, gold, all those things that we've hated the past couple of weeks should do much better in the coming weeks when that happens. We're not there yet when that exhaustive high occurs. Good question. So Bitcoin, if we look at it, we highlighted this area as just sort of the area that you want to bet on it going lower, right? This is normal, fairly normal trading. You can see that we're in a downtrend, 20 below 50 and downward sloping and such, lower highs, lower lows. Just it's trading technically very well and should be going lower. The more tricky one that we got right was gold, because gold was not bearish, but we turned bearish on it. Bitcoin, we did the same thing. Bitcoin, we I wouldn't say we predicted the high. We saw the high, and there's a difference, right? We're not fortune tellers. I don't have a crystal ball, but we trust we kind of know it when we see it, and we called this. This looks like an exhaustion high. In an exhaustion high in Bitcoin, you have made a multi-pronged move. It's like the runner. Here's the start of the race. See the huge volume and the breakout. This is when the gun went off and the race began. This is it grinding it out in the middle of the race. And then as you get to the finish line, you sprint for the finish. And that's exactly what it showed, is it sprinted to the finish line. That's short sellers just getting run over. That's buyers losing their minds and buying even though we're extended away from moving averages and too vertical and there's just too much hopium and good news and so on. That's what an exhaustion high is. So we did a good job of spotting that. Gold had something pretty similar a little bit later on. Gold sort of had two exhaustive signals. One that was pretty correlated with Bitcoin, but gold held out a little longer, tried one more false move. We called it a false breakout. And again, felt like that this was probably where it would tumble over, and it has to this point in time. So I think those are trading. A lot of these assets are just trading very well to what they should be doing in this environment, in my mind. The difficult thing for anyone has been to stay the course, to stay the course of being more bullish on equities and more bearish on things like gold and silver and Bitcoin. It's not been an easy environment. And this is why I always try to train you with thinking differently and not using your emotions and not using even your logic. Logic will get you into trouble, right? We always say that news is just news. It's not good, it's not bad, it's just news. And we need to look at the dynamics and say, okay, well, it doesn't mean that gold has to go up because it's been going up, right? because there's good news or bad news for the markets, and so gold has to go up. It's a little tricky because if you said, what would be a great recipe for gold? You'd probably say, well, banking issues and debt ceiling issues and all these sorts of things. Well, came those were not new events, right? The banking issue was an unknown that sprung up here. So the banking crisis where there were runs on the bank, that started right back here. That's exactly where gold started, right? And the debt ceiling's not a surprise. We've known about that for months, so it's had months to get priced in. And so now gold goes on this multi-month run, and it's all the way up here. Well, now you can't say, well, it should keep going higher because the news is good for it, because a crisis in banking and a debt ceiling coming up. Well, these things have to be good for gold. No, they don't have to be. That's why gold was rallying back here. Now everybody knows. Now it's a known event. Now it's been priced in. What happens? Even as you're going into the debt ceiling, theoretically, this should be where gold would do well. No, no, no. This is where it priced it in. So it's confounding for anyone that's newer to trading, where they say, well, I would have thought the debt ceiling would be a good thing for gold because all of this risk and fear and so on. That got priced in ahead, and so usually you'll get this deterioration thereafter. It's a little counterintuitive. I would even say the opposite. Gold might go on a big blow off bottoming point here as equities go higher, sort of an inverse correlation, right? Let's imagine that equities, which have been trending up, have gone down a little bit this week. Let's say the equities go on a big final upside flurry. Gold probably goes on a final downside move. Maybe there's a resolution to the debt ceiling, and perhaps we get a huge drop in inflation. Remember, we've got an inflation number coming up in a couple of weeks, and we know it's going to drop by almost 1%, the annualized inflation number like we've talked about. So those things probably correlate more towards a market high and would probably correlate with gold bottoming. And then again, the same confounding, people would say, well, why would gold bottom when everything turned out good and rosy? Well, that's how it happens, right? You buy, it's the old buy the rumor, sell the news, right? It's things get priced in before the actual announcement hits. You don't want to be the one that's getting sucked in on the announcement. That's like everybody knowing, everybody that's kind of done their homework knowing that Apple is coming out with a new product, and so they're buying Apple, and it's going to be a revolutionary product. It's going to add revenue, and so they're buying months in advance. And then Apple comes out with this big announcement, hey, here's the new product. It's so exciting, it's so shiny, it's so beautiful, we think it's going to add all this. And the public goes, wow, that's really cool, let's go buy Apple stock. You should be selling at that point, right? The stock's probably, that's the day or close to it where it hits the highs and away it goes to the downside. So it's a little counterintuitive, but you've got to train your mind to not get caught up into the emotions, because the emotions of it, I mean, debt ceiling, a perfect example. I can't tell you how many emails I've gotten with people nervous. Well, what if they default? And what if they this? And, are equities going to collapse? And is the market going to go crazy? And so on. That's a lot of emotion getting involved. If you've been involved in these and traded for multiple decades like I have, then you've been through a lot of debt ceilings and you've been through a lot of these types of dynamics. And it's not to say there won't be a little freak out. I suggested as we get into the deadline, there will be a little freak out, which is exactly what this week has brought, is that little freak out going into the announcement, and then there should be a final run. Good question. US dollar outlook. Just from a chart perspective, you'd have to be more positive on USD, right? Breaking out here out of a period of indecision. So just forget what you think it should be doing and just look at what it is doing. Well, it's strong, it's bullish, it's upside move. Now, I could even put this a little bit further, and you might be saying, I know exactly what Corey's about to say. What comes next? Well, if we draw a little picture, it's obvious to everyone where resistance is, true? It's obvious to everyone what's been happening. And now we're in this mode. So what comes next? Probably a downturn that sets a higher low and then keeps going up. And we probably come up towards that high and struggle as we get there and maybe create a little handle of some sort, you know, and whatever, and then maybe break out in the future. I don't know. That's sort of what it looks like to me. I wouldn't be buying today. I wouldn't be aggressively piling in and chasing this upside move. But on the next dip, does US dollar look like something worthy of consideration? Absolutely. Because it's in that process of this is how it works, you know, and this is the process of higher swing highs, and then the next pullback very likely to create a higher low than prior lows and then go on another run. So I would be more bullish. The chart just suggests that. Now, if you had asked me a month or two ago, in fact, I lumped US dollar in with gold and Bitcoin and all those kind of anti-bank type of areas and such. And I mentioned that about a week later, that was a mistake. That the only one I got wrong was USD. And I thought, you know what? USD, it's moving for other reasons. Let's remove it from the list. Let's not think of it as a risk-off currency. And so I've stuck with that the past couple of weeks, that it's just moving on its own. And good thing too, because it just keeps going, right? So you don't want to think of this as a risk off because it's moving different than gold and different than Bitcoin and different than silver and different than Japanese yen and different than Swiss franc. It's moving on its own. So I think you just stick with that idea. I'm not looking at it like it's risk on, risk off. I'm looking at it as just its own asset, its own chart right now, and that the next move is probably one of a pullback, but that pullback probably finds buyers and goes on another run. And I think we're in that process of heading back up there towards those highs in USD. So great question there. Euro USD. So Euro USD, the nice thing about looking at US dollar in our charts there is that you get to see it versus all of the other currencies. What you'll ultimately find, though, is that there's correlation to that, right? And it's inverse in this case because Euro's listed first, but it's still the same process. We can see where the key level is. It's just the same chart kind of flipped the other way. We can see that it went through this process and then it's now in this mode. And what I think is that we're working our way back towards a retest, right? So Euro USD probably working its way down here somewhat. And I drew that a little too steep because I actually think it's going to, let me redo my drawing. I think it's more like this would be more accurate. Meaning, do I think Euro USD is set up to bounce? Yes, I do. It's a little too extended to the downside. It should have a few days of some upside. Let these moving averages roll over. They're going to cross bearishly. See how this 20 is going to cross below the 50, but we've made a lower low. We're probably going to make a lower high. I'm in sell the rip mode. So you're looking for a bear rally short setup. It's bearish. As it rallies, finds resistance, rolls over, you short it again. So it's a bear rally short pattern. And my guess is that it kind of works its way back here and then maybe handles out here and ultimately breaks. That's my best guesstimation for how this chart's going to look in the foreseeable future. So pretty much it's the exact same thing we just talked about with the USD. Since Euro's listed first, it just flips the chart. It just looks at it upside down, but I still think that's the same mode. Good stuff. Yeah, CAD. I still like CAD, absolutely. So for a trade, how do you trade the CAD? CAD isn't really taking off through this resistance, but I think it's still there. I think it's still coming. If you look at this little mini cup and handle and just use that as a projection of sorts, you can take this little handle portion and flip it vertically to get a sense of how high we go. So we'd say, well, about 85.50-ish to 86.20 is about the zone. That's about 70 basis points. So up to about 86.90. Do I think that this is just the CAD grouping, but I think it's headed towards at least 86.90 in the short term? Yeah, absolutely. I mean, I think that's a good projection for where it's going. So if you were looking at CAD, you could project it to go higher versus virtually anything, but you could stay with the risk off theme of things like, I mean, you could buy CAD versus yen, just as a very simple, easy example. CAD versus Swiss franc. I think those types of pairings make sense. So let's just glance at CAD yen as an example. And still in an uptrend, is broken out, looks very good, high basing. 12-hour chart, high basing. 4-hour chart, high basing. 1-hour chart, long basing. But ultimately, on all of these time frames, it's just a bullish chart setup, bullish price pattern, and I think will continue to move more to the upside. So something like CAD yen long, something like Swiss CAD against the Swiss franc would also work. Same type of concept here, where I suspect those are just kind of sideways-ish patterns, but let's look at this one just as an example. Here you have more of a symmetrical triangle, which is what I just called the volatility compression. It's just kind of consolidating. I think it moves up and out from here. I think CAD should continue to be a bit stronger than Swiss franc as an example. So good stuff. Yeah, I hope this was helpful. I hope it made sense in terms of what we're looking for. So as I said before, we've had a pretty busy week up to this point. We did the RBNZ yesterday. We'll have our currency recap on Thursday, and then as always, the trading room over the weekend. Thanks everyone for being here. Have a great rest of your week, and we will see you next time. Goodbye, everyone.